Hey, good morning. It's Mike Zschunke at Berkshire Hathaway Homes and Shift1 Properties in Scottsdale, Arizona. We're going to talk about the residential market, we're going to talk about the commercial market, and we're going to talk about the economy a little bit. Lots of activity this week. I literally just got back to my desk after two appointments, early appointments this morning. So what do you want to talk about? Let's see. About inventory. Saw an increase in inventory this week from last week in Scottsdale residential. Remember, we look at single-family detached home because that's a more stable number. In the multiple listing service, it was up 300 single-family detached homes for sale. Maricopa County was up almost 400. And in Scottsdale, we were up 58 single-family detached homes for sale, up to just over 1,200. I think 1,208 single-family detached homes for sale. So inventory, we're getting there. It's, I always hate when people say I'm not going to lie, because what, are you going to lie? So anyway, I'm not going to lie. It's been a little slow this week. Interesting, number of transactions has been a little bit quiet. There's a lot of buyers on the fence waiting for the election. I was hearing about this waiting for the rate cut, but we're going to talk about that later. Interesting. It's been a little quiet. It had a lot of new. I do a 4-mile hot sheet every morning around the 85259 zip code, and I had 19 new listings this morning, which is a lot. I don't know if I've seen that number in a long time. So inventory is getting back to normal. I just have, the buyers are on one side, the sellers are all, they think they're sitting in a castle. So it's our job to bring that together. Again, we walked away from a listing. I'm not going to overprice. I'm not going to list your property at too high of a number. It doesn't do anybody good to let it sit there on the market and not sell. So, we always say you want to be the third realtor by the time sellers get tired, the third time it comes back on the market. So, existing home sales came out this week, down 4.2% from last year for August. We expected that because July 1st was high. Mortgage rates were pretty high, over 7%, 7.5%. So that's, takes 30 to 60 days to close on a property or to get it under contract. So we expected a low number in existing home sales. But prices up just over 3% over last year. So, people are moving, things are buying, life happens, death, divorce, life changes. Things happen, people have to sell their properties, people have to move, and we're kind of getting back into that normal routine, but we've just got to, it's slow. It's like I've said before, turning a ship. It doesn't happen overnight, but, we're getting some houses, sellers are getting more reasonable, and buyers are pretty educated these days. So we're getting there, getting back to a normal market, and transactions are happening. It's the higher end is pretty normal. It's the lower end that slows things down. People have the affordability issues, but Scottsdale's average price in 85259 is 1.2 or 1.3 million dollars. So those transactions still happen, but you got to be reasonable when you're on your asking price. But is it a good time to buy? I think so, because we're starting to see that inventory come back. Of course, I'm in the business, a number of transactions. So I think it's a good time to buy. Rates are coming down a little bit, but I don't want to say that because we'll touch on that later. But inventory, you're starting to get your choice of houses again. And if you see something that's been sitting on the market for a while, give us a call. Let's make an offer. You never know the other side's situation. You never know what until you put it on paper and you start having that discussion, you don't know. You can never assume what the other side is thinking. So that's if you like something, put it in. We're seeing a lot of houses still come on the market under contract. Deals are happening off market. In fact, we've got an $800,000 one by TPC, right? Great house if you're to rent out for the golf tournament, the Waste Management Open. And another 900 out a little bit. It's in Phoenix, but it's just outside of Scottsdale. Beautiful house, great view. So, those sellers are willing to sell if we bring the right buyer, but they're not on the market. And a lot of stuff, that's why we are with Berkshire. It's the big network. We talk to a lot of people. A lot of agents. We know what's out there. We know what's available on and off market. Actually, we're working on a deal now in North Carolina. And it's funny, this client keeps sending me Zillow and Realtor houses, and they sold 6 months ago. So that's all old news. You really need to work with someone local and know what's going on. So we have a good contact over there in Greensboro, and working with them to get that deal done. So yeah, it's like I said, every deal comes down to what's best for you. Do you want to buy? Do you want to sell? So that's what. Commercial real estate, people the last year or so, people have been waiting for this crash in commercial real estate. It's not going to happen. Banks are renegotiating the loans. There's something called third-party servicer companies, and they're renegotiating. They don't want the real estate. What is interesting, the Fed cut rates 50 basis points the other day, Wednesday, and what that means to you is nothing. But banks lending to each other, the rates are now, their target rate is now 0.5% lower. Mortgage rates actually went up, bonds went up. It's all based on expected future value. We're going to try and explain that in a little bit. So mortgage rates did tick up a little bit the last couple of days since the Fed cut rates. So if your agent is telling you rates are down, ask them the details. A lot of people just parrot what they hear in the media, and that's not necessarily true. Yes, they have trended down, and they're going to continue trending down, we think, but it'll cost you more this week than it did last week, because bonds are based on expected future value. It's not an overnight transaction. It's no surprise. But anyway, going from there, cap rates, it's return on your investment property, your commercial real estate. Cap rates and interest rates are now starting to come together. So you're going to get investors, investors always look for the best return on their money. Whether it's stocks, bonds, currencies, indexes, whatever. Well, the real estate end of it, the cap rates weren't really weren't high enough as in comparison to the interest rates. So as those come together, investors are going to start looking more at real estate. So we should see some pickup in the commercial markets. Keep an eye on multifamily, though. A lot of those are coming due. There's a record number of financing the last 2, 3, 4 years. That's all coming due. That's got to be refinanced. If they can't refinance those, they're going to have some issues because rents have come down on the multifamily. So that'll be interesting. In the Phoenix area and nationwide, actually, it's all about data centers. All on the outside. Buckeye, Mesa. Everybody is building data centers, which is, it's pretty smart with technology. I think a couple weeks ago I said a chat GPT search uses 7 or 17 times more power. I want to say 17, but it might be 7 times more power than a Google search. So we've got these data centers. And I just read this morning that the 3 Mile Island Power Center is going back online, and they are going to sell electricity directly to Microsoft. So if you're in the power industry, call me. Let's figure out how we can get some land, or I don't know. Let's figure that out, because that's going to be hot. We're going to need power for these data centers, and in the country, it's already kind of it's going to get tight. So give me a call. There's opportunity to be made there. So that'll be interesting. Let's see. Economy. We had a Fed rate cut 50 basis points on Wednesday. Rates actually went up after the announcement. I thought, that was a little high. I'm not always correct. I expected 25 basis point cut. But, back at Peter Latronica, he was the operations manager at Bridgewater Associates, and we did a lot of track days together in high performance driving. Skip Barber, high performance driving school. The Fed, as you increase your speed, those inputs make more of a difference. So the Fed needs to be very careful. When you don't just want to smash onto the gas pedal, you want to squeeze the gas pedal, and you kind of want the steering inputs. As the things move faster and faster and faster, those inputs create more of a change. So the Fed needs to be a little bit careful. They don't want to upset the apple cart here. They don't want to put us into recession. So, I was pretty proud of Powell for sticking to his guns. He's talking about recalibrating. They're kind of changing their outlook on where this economy's going. And remember, it's not always interest rates. It's access to those funds, liquidity. They're shrinking the balance sheet, $25 billion a month, I think. So access to those funds, even if rates do come down a little bit, access to those funds is going to be expensive. So, and that's all noise. That doesn't really matter to you and me, the home buyer, my clientele, the investor, the small business owner that's buying his building. Those rates are already predetermined. I heard somebody at JP Morgan this morning talking about your portfolio. Now, the 2-year is wagging around. There's a lot of volatility there. So take your portfolio, extend it out. Remember, bonds are a flight to safety. And that's what you're seeing this week. Stock market's at record highs. Investors, typically on the most basic level, you either invest in stocks, bonds, or real estate. That's typically. So stocks going up yesterday. Today is triple witching hour. A lot of the stock options are expiring. Quarterly options. It's the most heavily traded day of the year, 4 times a year. And that's today. So that's this run up in stocks that you see right now. So don't get too excited about it. Typically over the last 34 years, the week following the triple witching date is a big down week. So if people are going to be jumping out of stocks next week into bonds, bond prices up, bond prices up, rates down. So that'll be interesting to see where that goes. And just watch cash flows. That's what we always watched. I was trained in the financial field. Watch cash flows. But real estate's, typically it's a good solid investment. And if you can afford to buy. If you can afford to sell. Prices aren't going to go anywhere. That people still have 2008 fresh in their mind, but there's just not enough supply. Builder stocks jumped up this morning and yesterday. Just people need a place to live. The population's growing, and there's. I talked to a flipper the other day that I work with. I do quite a bit of business with. She's awesome and full time. She knows what she's doing, and she says she's a little slow. It's just the sellers are asking too much. The margins are pretty tight on investment properties right now, but she likes to pick some stuff up just to keep busy. So anyway, we've got a busy day here. Just a lot of running around to do. Actually, we look at my post yesterday. Carefree, great property we looked at. Typical Arizona, lots of outdoor living space. I think it was $3 or $3.5 million up in Carefree. Beautiful property. And so anyway, give us a call if we can help you buy, sell. If you just have a question on how to work through a deal, let us know. So everybody's waiting for this election, but we have an election every 4 years. And you know what? Life goes on. Life goes on, so you just adapt and change. Yes, it's important, but that's another topic for another conversation. But give me a call, 203-733-5877. Happy to help however we can. Thanks for watching. We appreciate it. And if we see anything interesting this weekend, we'll check in. Bye. Have a great weekend.